Alright folks, welcome back. This is our Monday upload. You can see here on the left is the US dollar index. This is an hourly chart. We're only going to look at the hourly and 15-minute time frames because everything else is still salient from Friday's video. Alright, so before I add the annotations, it's better for you to revisit the video from Friday on the 17th. So if you haven't watched that, on the July commentary thread for July 17, 2020. Don't watch this video, stop it right here and go back and watch that before we look at this. Otherwise, the impact won't be the same. Alright, so here's the annotations. I mentioned on the dollar index, which is over here, the likelihood of going back up into this SIBI, sell side imbalance, buy side inefficiency. So we traded just above these equal highs in here. It tagged the liquidity and then broke aggressively lower and then taking out the low. That's exactly what I outlined on Friday. So if it was to trade up there, fine. It gives you the opportunity to look for long ideas on euro and cable if you were wanting to trade it. The buy side liquidity being taken here, aggressively moving through this candle, and then having this becomes a balanced price range. So consequent encroachment should be respected. As you can see, it is. Trades to it here and then breaks down. Now, here's one of the things I mentioned in Friday's video. I didn't want to see it trade down just below the low and reject. In other words, I wanted to see it have a more meaningful break lower of this low. We've yet to do that. We did trade below this short-term low here on the 15th of July. So we traded down through that low and then we popped back up into sell side imbalance, buy side inefficiency, consequent encroachment, balanced price range, and it takes it lower. But here's where it has to show its hand. If we rally back above this high, I don't look at that as it's completely filling in then going lower. I don't see that. Okay, same idea just reversed over here. Buy side imbalance, sell side inefficiency, down range, up range, becomes a balanced price range. Consequent encroachment should be respected. It is. Price is sent higher, closes in all the sell side imbalance on this candle, and we're sitting in here. Now, it needs to go from this consolidation higher, because if it goes lower and enters into this range here, the same thing is being said that I mentioned here, just in opposite terms. In other words, it should not come back up into here. We got what we wanted. We have a gap that's remained. It only came up a little bit. This is institutional order flow entry drill on an hourly chart. So for swing traders, there you go. It doesn't have to be a 5 and 15-minute time frame for a scalp. The ideas are universal. So the algorithm allows price to trade to this level, and then it spends a little bit of time there, and then displacement. Goes back up, rebalance, leaves a small portion open again. So we have a gap here, and we have a gap here. I'd like to see this stay open on the dollar, and then see it go lower. It can fill this in. I don't want to see it trade back above this high. So if it trades back above this high, I'm neutral, and I'll have to see what Tuesday's trading provides. But right now, everything looks like it should follow lower and euro trade higher. On a 15-minute time frame, and on euro, it's hard to do things left-handed. Alright, so that's a little too much. And we'll take that out just a little bit too. Alright, it's good enough. Alright, so I want to see it break down lower. And all this supposed trend line support, I want to see that get smashed. In here, same thing. I want to see this actually become a bull flag. I want it to be a bull flag, and I want this to be a bear flag, to kind of put it in retail terms. Because the logic behind everything I've outlined on the hourly chart should hold true to what current market structure is. I like how we took out the sell side liquidity resting below these relatively cool lows, and then also traded into the buy side imbalance, sell side inefficiency there. So it's a really nice move. Even between this candle's high and this candle's low, you get consequent encroachment there, and it still overlaps. So it's just a really nice reaction there. So it should, I have confidence that it should trade higher, attack the buy side liquidity resting above here, and then the sell side liquidity resting below here, and the lower low. So I want to see it go through this and with energy, not just like it did here, like peak and then come back. We don't want to see any of that. It's the stage is set, so it should continue higher. And that's all I got for you right now. I'll touch base with you tomorrow on another upload. Until then, I wish you good luck and good trading.